Good morning, everybody, and welcome to the next monthly Oasis webinar that we're hosting every month on the last Thursday of the month. I try and do a webinar about any of the subjects that we cover in the software that we supply. So welcome this month to the August webinar, where we're going to be looking at open period accounting. Just a second, I've got some people to admit. There you go. So welcome, and this month we've got the Oasis August webinar where we're going to be looking at open period accounting, credit management center, debt management, as well as Rectify Allocations. It really is just a little bit of a training and a reminder of these areas within Opera. And just next screen, we're going to be looking at the agenda that I'm going to be covering. So firstly, welcome. My name is Bruce Kidd. I'm the Sales and Marketing Director here at Oasis. And it's my job really every month to have a look at these webinars and to introduce you to areas in the software that we cover. Could I also just ask that everybody mute their microphones as I'm recording these sessions to produce a video for later on online, if you don't mind. No one's cameras are on, so that should be fine. I'm going to cover firstly open period accounting, some information about that, and we're going to look at a short video. The same with credit management center, debt management, which is part of the credit management center, as well as rectify allocations. After that, we'll have a Q&A session. In the meantime, while I'm going along, if anybody has any questions, please type them for me in the chat box so that when we get to the Q&A section, I can tackle those first if there isn't any other questions at that point in time. After that, we'll finish. I'm hoping we won't be any longer than an hour on this. As I'm saying, I'm recording these sessions, and I will give you a recording afterwards as a reference that you can use around the office or indeed just to learn more about the subject. So open period accounting. Open period accounting is an optional feature that allows you to control whether your nominal ledger accounting periods are open or closed for new postings. So accounting periods can be kept open as long as necessary, but are normally closed once management accounts have been presented for the financial year. So if you use open period accounting, each transaction that is posted in the application has a nominal ledger transaction date, which determines the accounting period that it is posted to and the period name that is displayed at the time of posting. The period that is posted to can also be the current nominal ledger period, a previous nominal ledger period, or a future nominal ledger period, as long as the period is open. We'll see that during the demonstration. You also do not need to change the application's system date because the nominal ledger transaction date determines which period is updated. So open period accounting works with both real-time update method and the batch transfer method, so the daybook method really of updating the nominal ledger. So an option on the company profiles form controls whether you use open period accounting or not. So some of the features just to run through. So the feature to create financial calendars for the previous, the current and future years. Yes, you can create financial calendars for the previous year, the current year, the future years, up to 3 future years, really. The feature of post to the nominal ledger without needing to change the application system date to be in the current nominal ledger period. Well, yes, you don't have to change the system date to do that. You can post to future nominal ledger period in the nominal ledger and from the sales ledger, the invoicing, sales order processing, purchase ledger, stock control, cash book, fixed asset, and payroll modules. So yes, the feature is that you can post to these future open periods in the current financial year or future financial years without needing to change the application's system date. So you can post to a previous nominal ledger period in the nominal ledger and from all the different modules mentioned before. So yes, you can post transactions to previous open periods in the current financial year or the previous financial year without needing to change the application system date, but only from the nominal. You can identify periods by description as well as a period number and year. Yeah, each period in the financial calendar has a short description and, of course, the period number to identify it by. And correct journals posted an error. Yes, journals that were posted into current or future financial years from the nominal ledger can be modified. You can change the account, cost center, project department for each of these journal lines during this process. So a quick look at the financial calendar, as you can see on screen. The open period accounting uses a calendar where you define your financial years with up to a maximum of 24 periods in each year. You can define a financial calendar for this year, last year, and 3 future years. Each year has a description. Um, each year, sorry, has a description, a year-end date, and the required number of periods. Each period in a financial year has a start date, a period description that displayed throughout the application, and an indicator that controls whether transaction postings are allowed in this period. In each financial calendar, you can choose whether an individual accounting period is open, closed, or blocked for postings. As you can see on the screen, what we mean, all the different modules are displayed in here, and whether these periods are open, blocked, or closed for postings. If you start with 12 periods, but you need to change it during the year, you can change the number of periods up to a maximum of 24. You can change the number of periods for a current and for future financial years. Previous financial years cannot be changed. You can control whether your operatives, so the users, can post transactions to each period in the previous financial year from the nominal ledger, the current year, or up to 3 future years. Periods can be open, closed, or blocked for each of the modules, as you can see in the list. So just some more information on the financial calendar. The transactions cannot be posted to periods that are either blocked or closed. So once I've done my period end or blocked the period for posting, no one can post to that. You can think of a blocked period as an interim status that prevents posting but can easily be opened if required by anyone who has access to the financial calendar form. Say because a transaction was missed and needs to be posted to that period. A closed period is a more permanent status, but it can also be opened if required. However, this can only be done by the admin user when a period has been closed. When you run the period end in the nominal ledger, you can choose to set the status for each of the modules to blocked for the current period. So when you run the year end command, you can then choose to set the status for all the periods in the year that are closing to closed. So basically, as you carry along during the year and you close your nominal ledger periods, each period, its status set to blocked so no one can post to them. You can open those periods when a user needs to create a transaction for a blocked period and block it after that. And once you get to the year end and you run your year end process, it then closes all the periods in that year, and then it becomes more difficult to open as it can only be done by the admin user if transaction needs to be posted. For example, if your accountant tells you you need to post some transactions back to your previous financial year, as an admin, you can do that. The set options form is used to retain the number of periods and current period in the current year and the current year value. So you guys have all seen the set options form where you define how many periods you are, which period you're in, which year you are in. The financial calendar backs that up. You can control whether your operatives can post transactions to each period in the previous, current, or 3 future years. So how does these affect the nominal ledger account balances? So just a little grid to show us the posting and associations and some notes that goes with that. I'm putting it on the screen because when you look back at the video, then there is this information you can obviously look. You can also find this in the help file of your Opera system. So posting to the current nominal period, yes, yes, and yes to the 3 updates and balances. all account balances are updated when the transaction is posted. To a future period in this financial year, the associated period balance is updated, yes, but the year-to-date and the period-to-date balances can't be updated as it's a future period. To a previous period in the financial year, so associated period balance updated, yes, year-to-date update, yes, but not period update, no. The transactions period balance and the year-to-date balances are updated. The period-to-date balance is not. To the first period in a future financial year, all three updates are a no, with the notes next telling us so. To a later period in a future financial year, again, no updates to any balances for that because it's so far into the future. And to a period in a previous financial year, that would update all balances in associated with the transaction that you posted. So it's time to have a quick look at a video. It's not very long, but it's done by Mr. Steve Powell from Pegasus, and it covers the open period accounting and an explanation of everything we had just looked at, just in video format. So let's have a look.
Open period accounting is a new nominal ledger function that is available to Opera 3 users. This new functionality allows you to define up to 24 periods in a financial year and to create the calendar for the current financial year, a previous financial year, and up to 3 future financial years. There are various controls, but essentially open period accounting provides users with the ability to post to any of these periods, provided that they are marked as open for posting. This gives the user total control and flexibility when it comes to updating the nominal ledger. The user can specify at the time of posting which nominal period a transaction is to be posted into, as opposed to relying on the Opera 3 system date. Sales or purchase invoices, for instance, can be posted into the current period, a future or a past period, so allowing these transactions to be posted into their correct period for their nominal analysis. Open period accounting is optional. It can be turned on for each individual company. So if we go into company profiles, in this case Orion Vehicle Leasing, we can see that the open period accounting has been turned on. If you're using real-time processing, the transactions will reach the correct nominal and period at the time of posting that transaction. The key to open period accounting is the financial calendar. At the top of the screen, we can see that we have the current period and year and the year end date. So in this case, the current year is 2010, the current period is period 10. And in the center of the screen, we can see the number of periods that have been defined for this particular financial year. And in this case, we can see that it's been set to 12 periods. We can see that highlighted is period 10, and this is telling me this is the current period, and the start date of this period is the 1st of October 2010. There is a description for this particular period, and it also shows me which of the related modules link into the nominal ledger for that particular period, and are they open or blocked or closed for postings. If we look at period 9, however, we can see that these systems have all been marked as blocked. So it will not be possible to post from those modules into the nominal ledger for that particular period. If we look at the year tab, we can see that we have the current financial year, 2010, and we can also see that the financial year of 2011 has also been created. If we go to the action button, we can create the previous financial year, and we can create up to 3 future financial years. Let's create the previous financial year. It says, do I want to base this on a model? And I can choose the previous years that I might want to base as a model on. I'm going to select none. For the previous financial year, it asks me what is the start date and what is the end date. And when I select OK, it's just warning me I'm just about to create the financial calendar for the previous year, 2009. If I select yes there, then I can now see that I have the calendar for 2009 as well as the calendar for 2010 and for 2011. As we can see for period 10 here, we have the status flag. So for instance, for the sales module, I can determine whether it is open for posting to the nominal ledger, whether it is blocked or whether it is closed. An open status means that journals can be posted to the nominal ledger from that related module, in this case sales. A closed status prevents journal postings. A period might be marked as closed when a period end has been run, for instance. A block status is an intermediate state that prevents postings but then can be simply switched to either open or to closed. For each of the linking modules, it is possible to control the posting status individually. So we might, for instance, want to block the purchase processing, but we may want to leave the sales processing open. If we go to period 11 and we mark the nominal as blocked, notice that all the other related modules are also marked as blocked, because if we can't post into the nominal, neither can the sales, purchase, fixed assets, stock or payroll. Let's revert that change. Okay, now example here, for the current period, let's go through and let's mark the purchase ledger as blocked, but let's leave the sales, fixed assets, stock and payroll open. Let's save that change away. Okay, let's post a purchase invoice and let's see what happens with that block period. I'm going to go through and I'm going to post an invoice. Notice it's warning me. The nominal period is blocked for purchase postings. Let's put in a reference number. Note that there is a new field called nominal ledger posting date. This determines the nominal ledger period that this transaction will be posted into. Note that we will not accept a posting into October 2010 because we know that that has been marked as blocked, so we need to change the date. Let's change it to November. We know that November is not blocked, it's open for posting, so therefore this transaction will now get posted into that November 2010 nominal period. Let's put the transaction value on. Let's put the analysis for that. And let's post it. And I don't want to capture a document. If we now go into the nominal ledger, and let's view that transaction, let's extend it to period 11 and refresh the data. If we go into the current liabilities, trade creditors, we can now see that that transaction has been posted into period 11 because we know that period 10 had been blocked. Okay, we're now starting to get the idea of how open period accounting is working. Okay, let's go through and let's post a nominal journal, but let's post this nominal journal into the previous year. I'm going to call this test journal. I'm going to set the date to be 2009. And let's make this a very simple journal. I'm going to post to the first nominal account £100 debit, and to the second nominal account I'm going to post £100 credit. However, let's set the nominal posting date to be 2009. It warns me, I'm posting into the previous year. Is that okay? Yes, it is. And it therefore goes through and it posts this journal through to the nominal ledger for that particular period. We can see that because if we take a view of the nominal ledger, and this time let's go back into the 2009 financial year, and let's go and look at the fixed assets, freehold buildings, we can now see that that transaction for £100 has been posted into the previous financial year, into previous 10 of that financial year. Okay, to conclude, open period accounting opens up all of the nominal ledger periods from the previous to the current to 3 future financial years and allows us to post into any of those periods in a controlled manner. Nominal journals can hit the nominal ledger immediately when the transaction is posted. The period into which the transaction will fall is based upon the nominal ledger posting date as determined by the user. This makes the nominal ledger a far more powerful and flexible tool in which to analyse your company's financial data.
So there you got the video, although quite an old one. The functionality is pretty much the same as it is now. So there you go. And if there's any questions, I'll tackle them. Work. So let's move on to the Credit Management Center. So the Opera 3 Credit Management Center provides you with a consolidated view of the information that is critical for effective credit control management. You can view all the necessary information to help improve your cash flow, reduce your bad debts, and improve the overall financial position in your business. You can quickly see what is owed and who owes it effectively. The information on this form is displayed at 3 different levels. Firstly, an overall view for your company, including all your customers. Secondly, a view of details of individual customers. And thirdly, a view to the actual transactions. A diary view is also provided so you can record and view any actions that have been recorded. Using this form, you can do all the necessary tasks for effective credit control management, including the following: filter the information displayed according to your requirements, show overdue invoices only those over the credit limit, those in a selected credit management group, those overdue in a chosen period, only overdue invoices above a chosen value, and so on. You can view all your disputed invoices and outstanding actions for credit management. You can view your average debtor days and average creditor days, debtor analysis and promised payments. View customer contact details and account status details. Changing a customer's credit limit, put them on stop or take them off stop. Change a customer's credit rating or credit score. Mark invoices as disputed or not disputed, or change their due dates. Design debt management, debt correspondence, and email cover letters. So the first video we're going to look at covers the credit management side and not the debt management. So let's have a look. This one is done by Samantha Garrett from Pegasus. So she covers it very well. Let's go.
Cash is the lifeblood of businesses, and a good cash flow is crucial to running a successful business. You need to have the right processes in place to collect the cash, which is key to ensuring that there is enough cash in the bank. So the better the tools you have for credit control, the better the return on investment and the benefit that you get from Opera 3. Knowing who owes you what and when they are going to pay you is critical to managing your customer debts. That's exactly what the Credit Management Centre is designed to do. At the heart of the Credit Control Centre, as a financial director or credit control manager, you will find a complete overview of the financial position of your company. This information, of course, can be restricted to only allow the relevant personnel access to this sensitive data. So here we can see a graphical representation of management information, including the total invoice debt. So not only can we see how our credit management team is performing, but even more importantly, we can see where our money is. This includes overdue cash to be collected and invoices not yet due for payment, through to age invoice debt and also our company turnover. Customer debts instantly shows us who's got our cash ordered by who owes us the most. It displays any disputed amounts, unallocated amounts, which gives us a clearer picture of what cash we have already received, which allows us to focus our attention on the accounts that will make the biggest difference to our bank balance. We have clear visibility of outstanding actions and disputed invoices. This helps us to see issues that need to be resolved before any cash will be received. Clear financial ratios such as your overall company average debtor and creditor days, with further information all at our fingertips, such as a further detailed breakdown by period of our debtor analysis. But of course, the key to any credit management system is how much money has been promised to us. So here we can clearly see cash that's been promised to us today, over the next 1 to 30 days, 31 to 60, and also over 60 days. We can also see any promised payments that are now overdue. The Accounts and Transactions tab is where we, as individual credit controllers, can chase our customers for money owed. Up at the top lists the customers that we are currently chasing. Our customers can be organised and filtered into user-definable credit management groups. So, for example, perhaps we might have a high risk, medium risk and a low risk group. In addition, we can filter by overdue accounts and in order of the most overdue balance. We may also want to filter on customers that are over their credit limit with the ability to sort our list view as required. Selecting a customer filters all of the information on this dashboard for the specific account, including the total invoice debt, where we can also view the aged debtors graphically for this particular customer, their turnover and any promised payments. We can also access further information such as the account contacts too. Any actions, either complete or not yet completed, are also displayed, which is where we see the history of any previous actions that have already been taken. Quick access to the account view also provides us with a history of the account transactions, which is essential for credit control. We can drill down further into a customer to the Transactions tab. Here we can clearly see invoices that are overdue, and we can also drill down into a PDF of the invoice. We can view and add any actions, including any promised payments that may have been recorded against a particular invoice, and crucially, we can also dispute or undispute invoices either individually or in bulk. Back on the Accounts tab, actions that are added can be set for a particular member of staff or for yourself, and could be for recording promised payments, a follow-up call, anything. And what's more, we can even set an alarm in the action which will send a message using Opera 3's notification services to remind us. We can easily reorganise our customers into different credit management groups, and essential to good credit control, we have the ability to put any accounts on stop and to adjust their credit limits as appropriate, all done via the Credit Management Centre. Imperative to credit control is knowing exactly what needs to be chased and when. So the Diary tab displays a calendar of all actions that need to be done. We can filter by a particular user, so we could filter for only actions that I need to do today or this week. If we drill into the action, automatically we're moved to the relevant action for that particular customer, which allows us to enter in additional information and record the outcome. All of the related credit control reports have been grouped and placed within the Credit Management Centre itself for ease of use and access. Included in these reports are our print debtors letters, our statements, and a new diary actions report, which can be filtered in many ways to provide powerful reporting and analysis. In addition, a new promised payments report is also available, both of which can be usefully output directly to Excel. Remember, cash is king. With Opera 3's Credit Management Centre, you'll be able to improve your cash collection performance, streamline your credit control procedures and reduce bad debts, all of which helps to improve your cash flow and maintains a healthy, successful business. Thank you for taking the time to watch this short demonstration of the new Credit Management Centre now available for Opera 3.
So thank you, Sam, for that. There was the Credit Management Centre, and in conjunction with the Credit Management Centre, I'm going to move on to the debt management within that, where we really cover the correspondence that has to do with our credit management. Debt management in the Credit Management Centre provides a facility to design debtor correspondence and email covers and send them to your customers. You can create different designs for each customer if required, or use the same design for all customers. You can design up to 9 levels for requests for payment, or use the same design all the time. Debtor correspondence is available in home currency only. Print debtors letters customer statements or invoices, add diary actions as reminders for credit controllers to contact customers, chase debt, and so on. Diary actions can also be edited. So I'm just going to move on to the video. Again, this one is done by Sam from Pegasus.
Managing customer debts and ensuring cash is collected is vital to running a successful business. The Credit Management Centre for Opera 3 provides an integrated, easy-to-use tool that consolidates all of the information you need to help reduce bad debts, improve your cash flow, which can rapidly boost the financial position of your business. This short presentation will introduce you to a valuable element of credit management called the Debt Management Facility, which is available for Opera 3. My name is Samantha Garrett and I'm one of the product specialists here at Pegasus Software. It's imperative to know who's got your cash, but you also need the flexibility to incorporate professional debt correspondence into your collection processes. So, an essential part of streamlining your credit control procedures is to chase those customers that have failed to pay within their agreed contracted terms. Opera 3's Credit Management Centre provides this solution perfectly, which includes an intuitive debt management tool that can mail merge, generate, and then either print or email customised debt correspondence. And what's more, the server handles the hard work in the background so that you can continue working. One of the benefits of this solution is that you're not restricted to only having maybe 2, 3, or even 4 different levels of correspondence. Instead, you have the flexibility to define up to 9 levels of debt correspondence that can be tailored to suit your business requirements, which means that the software will adapt to fit your credit control policies rather than the software making up the rules. You choose how you want your levels of correspondence to be created and sent, either by days overdue or by period. And you can also specify a minimum debt level, helping you focus your debt recovery on those customers that will make the biggest difference to your bank balance. In addition, you can tailor individual customer terms, such as their minimum debt level, credit limit, are they to receive printed or emailed correspondence, or should they be excluded from receiving such correspondence altogether, putting you in control of managing sensitive customers. Designing your letters and emails couldn't be simpler using the intuitive designer. Up to 9 levels of correspondence can be crafted and tailored to fit your company's credit control needs, but what's more, you can also create up to 9 levels of individual customer specific letters for those accounts that may need a more personalised approach, or perhaps require their letters in a different language. Of course, you might decide that you wish to use the same letter for each demand for payment, but the choice is yours. You'll be able to use the designer straight away due to its familiar feel and similarities to other software products, meaning that you don't have to learn new controls. Simply pick the level of correspondence that you wish to design and away you go. Intelligent formatting options allow you to powerfully tailor your letters by inserting images, customizing text fonts, sizes, colours, highlighting, formatting paragraph options, as well as being able to incorporate tables, bullet points, numbering, just to name a few. But more importantly is the ability to incorporate a diverse range of mail merge fields into your correspondence. This instantly personalises and ensures that accurate, up-to-date information about each account is included, such as the customer's name, address, last letter date, total balance, balance overdue, credit limit and the date this was agreed, their trading terms, through to disputed and undisputed overdue amounts. This can then be broken down by 1 month old, 2 months old, and then 3 months old and over. This level of freedom gives you the ability to include different information on each level of letter to strengthen the demand for payment message. Now, you may wish the message to become more forceful as the debt ages, but again, the choice is yours. Alternatively, if you prefer, you can design your letters in, say, Word, for example, and simply copy and paste, add in your mail merge fields, save away, and your letters are ready to go. In addition, If you ever need to create another level of letter, you can copy and paste from a previous letter and amend as appropriate. Now, it might be that some customers need a more tailored approach, or maybe their letters in a different language, in which case easily pick up the account and then draft customised letters specifically for that individual account. When emailing debt correspondence, the letter will be attached as a PDF document, in which case you will want a professionally written email referencing the attachment. You might choose to use the same email design for each level of letter, or you might want to design a different email for each level to reinforce the severity of the correspondence. Let's see this working. You can choose how and when you wish to generate your debt correspondence, either individually or in bulk, daily, weekly, monthly. It's entirely up to you. You can even select the level of letter, a range of levels, or a range of customers that are due to receive the next demand for payment. Impressively, this facility can generate both letters to be emailed and letters to be printed at the same time. You can even choose to preview and approve the customers before their correspondence is generated. And there you have it. So what happens now? Here comes the technical bit. You can now continue working whilst the scheduler handles all of the processing in the background on the server itself. This is known as server-side processing. The letters will be mail merged and the PDF files will be created. Then they will either be printed for those customers who require a hard copy, or for those customers receiving via email, attached to the relevant email template and sent via an SMTP server. All of which happens automatically in the background, minimising disruption to both you and your colleagues. The email will then be delivered into the customer's inbox, like so. Need to resend a letter swiftly? No problem. The debt management history instantly displays an audit trail of previously sent letters with drill down capabilities to the physical PDF, which of course can be easily resent at the touch of a button. In addition, for each debt correspondence that is created, a sales ledger note and a credit management completed diary action is automatically recorded against the relevant customer. The account is also updated to display the last letter and the date sent. This provides visibility of key information to all staff that might be working on the account. Still want more of an audit trail? A historical report of all debt correspondence generated provides a complete audit trail, particularly useful for difficult customers where you might want an instant snapshot of previous demands for payment. The intuitive debt management facility provides up to 9 levels of intelligently tailored debt correspondence per company or per individual customer for sensitive sites. These can then be
So sorry, that video looped and started again for the first few seconds. So there you got it, all about the correspondence that you use in conjunction with your credit management. Up to 9 levels of correspondence you can use emailed out from your system. Many customers of ours use this facility. If you don't, perhaps it's a good idea to look at it. It does make credit management a little bit easier for the organization. So I want to move on to the Rectify Allocations functionality, and hopefully we can get through that before our hour is up. The Rectify Allocations functionality, as you know, you use the Rectify allocation to select and deallocate a previously posted allocation for the current customer or supplier. That is to correct an allocation that was posted in error. So when required, you can also remove any associated transactions such as receipts, discounts, or exchange rate discrepancies. Whenever a deallocation is made, appropriate historical/audit trail information is retained. This information will be purged when the period end command is run. This happens provided the transaction exceed the number of periods specified in the keep transactions box on either the options form and associated with each customer's record on the sales ledger processing form, or on the sales ledger utilities set options form. The rectify allocation command is in the form of a wizard, which takes you through each stage of the command. This assists you in selecting the required allocation and associated transactions, selecting the error correction process to be executed, and actually executing the process. The wizard cannot be run in the relevant tables if the relevant tables are being used by another process. Likewise, once the wizard has been initiated, the relevant tables are locked so that they cannot be used by another process. So important errors with cash with invoice transactions cannot be rectified in this process. These transactions involve cash details that were entered in other modules like sales and SOP invoicing. So upon completion of the rectify allocation process, the publisher form is displayed, which enables you to produce an audit trail report. If you have selected to do a deallocation only, that is, you did not select the remove allocated transactions checkbox, then the report contains only information pertaining to the deallocation. However, if you selected to post a deallocation and to remove the associated transactions, that is, you did select the remove allocated transactions checkbox, then the report will contain information pertaining to both the deallocation and to the removed transactions. The audit trail report also states whether or not you selected the removed allocations checkbox. So let's jump straight into a short video looking at the rectify allocations.
The Rectify Journals utility within Opera 3's nominal ledger was a huge success with our customers. It provided an easy-to-use, hassle-free facility to rectify and repost nominal journals that may have been posted to perhaps the wrong account or to the wrong date. This meant that the user didn't have to go through line by line, do all of the reversals and post all of the adjustments manually. So, to further strengthen the error correction utilities within Opera 3, the latest release now incorporates Rectify Allocation utilities to allow our customers to undo incorrect allocations with the added ability of also being able to remove the associated transactions such as a sales receipt or a purchase payment. Both of these utilities are available as standard within Opera 3 sales and purchase ledgers and have been designed to significantly speed up and simplify the current processes required for rectifying misallocated transactions. So let's look at the sales ledger rectify allocation facility first, and let's imagine this scenario. Let's say that we've received a cheque from a customer with no remittance slip and no reference to the invoice that they're intending to pay or part pay with this cheque. We do our best to allocate the cheque correctly. However, with lots of invoices outstanding for similar amounts, let's face it, we're only human and mistakes can be easily made. Later on, the customer points out that actually that cheque was to pay for a different invoice because maybe the invoice that we've allocated the receipt to isn't actually due until the end of next month. So what do? Well, currently we might raise a credit note, then post a refund, allocate the two together and then start the whole cycle all over again by entering the invoice, then the receipt and then allocating them together correctly. This can be a tedious and time-consuming process, and then at the end of the month when it comes to auditing it can be quite difficult to backtrack and see exactly what happened with all of these transactions. Surely all we want to do is deallocate and then reallocate the receipt to the correct invoice, right? This should be a straightforward, quick and simple process. Well, as you're about to see, now it is with the new Rectify Allocation utilities. Let's rectify this situation. First, we need to locate the customer's record, and then from the action menu, we're going to select the new Rectify Allocation utility, which presents itself as a user-friendly wizard that will guide us through this simple process. We have a range of selection criteria here. I'm simply going to select date range, I'm going to leave it blank, and I'm going to hit next. And this displays to me all of the allocated transactions for this customer that are available for deallocation. Of course, in the real world, you may have hundreds of allocated transactions listed here, so we need to be able to find the transactions misallocated easily. So we can either use the active grid functionality, perhaps to sort on either one of the columns, or I can use the search facility, which will search across all of the data that I have within this grid to make it easier to find what we're looking for. So we could enter perhaps a reference or the date or even an amount. I'm going to enter in the invoice number. I'll hit find next, and then it displays to me the transactions that it found that meet what I've entered. And if we say OK, you can see that automatically we've been moved down to that transaction within our grid. Now we can see the below receipt that has been allocated to the invoice because of the allocations number. However, if I double click the invoice or hit F5, we can see that the system intuitively selects the other transactions associated with this allocation. Now, it might be that we want to completely remove that receipt, in which case I could select the Remove Allocated Transactions tick box. However, in this example, I simply want to break the allocation link to allow me to then reallocate to the correct invoice. So I'm going to hit Next. Here it's showing me the invoice and the receipt that is to be rectified and deallocated, and we must put in a comment for auditing purposes. So I'm going to say paid incorrect invoice, and all that's left to do is hit Start. The system prompts me, are you sure you want to rectify this allocation? I'm going to say yes. And then the publisher is displayed, and I'll send that through to screen, which gives us an audit report of the allocation that we have just undone. If we close the report down, we can see that the transactions are now greyed out because they've been rectified, and all that's left to do is close the wizard down. I'm logged in as a user that has access to the allocations routine, and because I haven't opted to remove any transactions, I'm therefore being given the option to reallocate the receipt now. I'm going to say yes. Straight away we're taken into the allocations screen, and I'm going to select the receipt and allocate it in full to this invoice 667. And there you have it. It's that simple. So what's actually happened here? Well, in this example, we've simply deallocated and then reallocated. So the link between the invoice and the receipt was broken. No balances were actually updated. It just means that both the receipt and the invoice would have been visible in the customer's outstanding transactions. However, we reallocated at the same time. So if we now go into the account view and view all transactions, we'll find the receipt. We can see that the receipt has been allocated against this invoice because the stat number is the same. We can also see the original invoice there that we allocated the receipt against, which is now outstanding. Very often you may have one receipt allocated to several invoices, in which case when you select the receipt to be deallocated, the Rectify Allocation wizard would have automatically selected the associated transactions for you, ready to be deallocated. Okay, let's look at another scenario. What if we've received a cheque but it bounces, or for whatever reason the cheque needs to be cancelled, in which case we haven't actually received the cash into our bank account. However, we've already posted the receipt and allocated it against the relevant invoice. What we need is to be able to remove the receipt transaction from our system. So let's scroll through and find a different customer. This time Abington Hire. We're going to go into Action and we're going to pick up Rectify Allocation. Again, I'm going to leave the date range blank and we're going to go through to Next. I'll find the receipt in question, as I haven't got too many transactions here. F5 or double click and we can see it selects both the invoice and the receipt for us. However, this time, because I want to remove the receipt, I'm going to tick the Remove Allocated Transactions tick box. And with regards to removing transactions, invoices, credit notes and adjustments, unless the adjustments are exchange discrepancies, will never be removed. Only the monetary transactions will be removed, as these are the transactions that you're more likely to need to remove, such as receipts, payments, refunds, discounts or exchange discrepancy transactions. So let's hit Next. Because we're removing a receipt, we are going to be updating the nominal ledger. In my example, I'm using open period accounting, therefore it's asking us to enter in a nominal ledger posting date. The system will then go off and check to see if that period I've selected is open to accept postings from sales to nominal. I'm going to say OK. And then up at the top we can see the transactions ready to be deallocated, and then this time down at the bottom we can see the receipt that we've opted to be removed. Again, I'm going to put in a comment, so I'm going to say bounce check and I'm going to hit start. Again, the system prompts me, are you sure you want to do this? Yes, I am. Up comes the publisher, which gives us an audit trail showing us firstly the deallocated transactions and then also the removed receipt down at the bottom of the report. So let's close the report down and I'll hit finish. Now, if we load the outstanding account view, we can see that the invoice 556 is still outstanding. However, the receipt is no longer visible, and that's because it's been removed. And if we close that down, we can see that the current balance for this customer has increased by £4,800, as if we never actually received the cheque in the first place, because our customer still owes us this cash. And of course, this is going to affect our bank balances, which will go down by the amount of the receipt. And the reverse side to that posting is to the debtors control account, which has actually increased because the customer still owes us that money. So let's have a look and see what's happened in the nominal ledger. I'm using real-time update of nominal, so my journals have been posted straight away. However, if you're not using real-time, then this posting will be sitting in the transfer file, ready to be transferred into the nominal. So let's go into our nominal view and we'll filter purely for the current period, which is period 3, 2012. I'm going to select a simple view by type, subtype, and then account, and then I'm going to hit refresh. And there, as we expand out our current assets, we can see that our trade debtors has been debited by £4,800, and also in our main bank account it has been credited £4,800, as we no longer have this cash in our account. And if we actually drill down into the journal data, there we can see the reverse posting of the original receipt. The key point here is that the original receipt posting and the reversal posting from removing the receipt will both be available within the nominal ledger and cash book if required for auditing purposes. However, you will not see the removed transactions directly in either the sales or purchase ledgers, but they will be available for auditing and reporting purposes within the new Rectified Allocations report. So let's close that down. And along come the auditors asking us to run the allocations report. And as they start to go through this report, hang on, we've got some missing here, where have they gone? So we can then run the new rectified allocations report. I'll ask it to please include removed transactions, which we can then use to fill in the gaps missing from the allocations report. These two reports run hand in hand. Now, of course, there will be other scenarios. For example, there may be discounts or exchange discrepancy transactions for foreign currency customers associated with some allocations. In these circumstances, they will be removed automatically when running through the Rectify Allocation wizard, because these transactions may be specific to the invoice the receipt was allocated to in the first place and would therefore not be relevant to the invoice that you may be reallocating it to. The Rectify Allocation wizard and the Rectified Allocations report are both available within Opera 3's purchase ledger as well. They work in exactly the same way that we've just seen within the sales ledger. However, the journals that will be posted will be the exact reverse of those made within the sales ledger. Both of these utilities within Opera 3 sales and purchase ledger significantly enhance Opera 3's error correction facilities. This is a huge step forward for Opera 3. Firstly, being able to very simply break the allocation to allow the user to allocate to a different invoice, but then to also be able to delete the associated transactions at the same time. Not only does that keep our systems tidier, but it speeds up the processes we would have previously have had to have taken to rectify these types of situations. So now, as you've just seen, we only need to run one intuitive, easy to use wizard which does all of the hard work for us and eliminates the chance of further mistakes being made. Thank you for taking the time to watch this short video on Opera 3's Rectify Allocation utilities, now available for Opera 3.
So thank you, Sam, for that. That covered the Rectify allocations. I hope you guys found that really useful as it went through all the functionality within the area of rectifying allocations. Now, I'm moving on to the Q&A section. I did have one question on the chat come through during the time. I'm going to read it out. I see it only affects a couple of you guys attending. So how does open period accounting impact CIS or vice versa? Well, you didn't state which version of CIS or Opera, but I can tell you in totality that on the latest versions of CIS 5 and Opera 3 SQL SE, there were some issue with the open period accounting, but that's now been resolved, I believe. Open period accounting doesn't really have an effect on CIS other than the period needs to be open for posting in the same way that it works within Opera itself. So if the period is blocked for posting, you will need to reopen it to run the ledger links before you run that. When you have Opera 3 VFP and CIS 4 or 5, there were no issues with any of this. So I think that answers your question. Anybody else got any other questions regarding what we saw today? I'm not getting anything, so I'm going to assume there are no questions. So I'm just going to move on to tell you, keep an eye out. I run these webinars on a monthly basis. In the customer zone on our website, you'll always find a set of events happening and things that you can book and use through Oasis. So next month, we've got a CIS webinar, CIS 5 webinar specifically. I think we're going to be covering the sales and the plant hire areas within CIS 5. I will send invitations out for that, so please keep a lookout. And for those of you that use CIS or are interested, it might be a good idea to join me for that. So thank you very much for joining me today, and I look forward to seeing you on the next one.